1. Good afternoon, everyone, or let me say good day, everyone, and everyone who is dialing in to this webinar from across the globe. My name is Samuel Nwanze, and I'm the Chief Investment Officer for the Heirs Holdings Group. And in a short moment, I'm going to be taking you through a discussion around managing your finances in uncertain times. So we will start very shortly. Thank you. Welcome once again to everyone, and thank you very much for taking out time to join this webinar. I'm going to spend a bit of time with you today to talk about this burning issue of how you can manage your finances during a crisis or during uncertain times. And what I'm going to do is I'm going to talk a bit for roughly about 30 minutes and then open up for questions so we can actually, speak on specific issues that you may be facing in your business. And just before I go into, I just want to emphasize a few things. Number one is I'm focusing on your finances. And so I'm not talking about all that you need to do as a business during a crisis, but my discussion is going to focus more around how you should manage your finances during a period of crisis. And the second thing is that I'm focusing on a business. So I'm not talking about your personal finances, but we'll be focusing on business and particular buyers towards businesses that are going through certain difficulties, whether you're a business in the startup stage or in the early stage, and you haven't actually started crossing sufficient revenues. So how should you manage your finances during this period? The truth of the matter is that whatever it is I'm telling you today is not only applicable during a crisis period, but it's actually applicable throughout the course of your business. So I don't want you to see these as things that you should know now, and once things get better, you kind of like put them in the bin. But I want you to see them as something that you should apply as a business principle in whatever you're doing. So let me start off with something very important, which I always tell all entrepreneurs that I work with. There are 3 rules for success in business. 3 important rules that you need to rule. Rule number 1, don't run out of cash. The second rule is make sure you don't run out of cash. And then the third rule is C rules 1 and 2. The importance of cash in a business cannot be overemphasized because cash is the lifeblood of any business. If your business is going to survive, then you have to focus on how cash is being moved or the kind of cash that you are currently carrying in your business. If you run out of cash, then it is clear that your business will die. As a matter of fact, recent study by the Business Insider shows that 82% of businesses fail because of cash flow problems. So cash is extremely important, in whatever it is that you're doing as a business. And it's very important that you keep careful focus on the cash flow position of your business, particularly in a period when you are going through crisis or in a period where things are uncertain. So most of my conversation today is going to focus around this particular issue of how you can better manage your cash so that you can go through any difficult period. Now, one of the things that I find that many entrepreneurs, particularly if you're not numerically inclined as an entrepreneur, that you run away from is numbers. And you find that a lot of people talk about different numbers that you need to know, these ratios or this calculation, and they talk about different things that are important for you to understand. And oftentimes, if you are not somebody who has studied finance or you're numerically inclined, you may find it a bit frustrating. So what I want to do is to tell you some important numbers that you need to know and how to calculate them. Now, these numbers are the important ones that you need to focus on as an entrepreneur. The rest you can leave to your accountant or to your CFO or whoever is managing your numbers. But these three ones, you should always look at them, these numbers. So there are three numbers that are important that you should know and you must always focus on. One is the cash coming into your business. It's extremely important that you understand and you know as an entrepreneur what quantum of cash is coming to your business. The second number you need to know is the cash going out of your business. So if you don't know anything, you need to know one, cash coming in, two, cash going out. And then the third number that is important for you to know is your bank balance. You need to know what is left in the pot. When money comes in, it goes into your bank. And when money goes out, it goes out of your bank. And at the end of the day, you need to know what is left in the pot. So these are three numbers that are important for you to run your business. And it will amaze you at how many entrepreneurs don't actually know these three numbers. I've had several engagements with entrepreneurs and I ask them, what's your bank balance? And many people don't actually know. If I ask you on average in a month, how much cash goes out of your business? And a lot of people don't actually know that. Well, in times of crisis and as a matter of fact, during normal times, these three numbers are extremely important for you to know as an entrepreneur. Now, using these three numbers, there are four calculations that you need to know. Four very simple calculations. As a matter of fact, one of them is not even a calculation. So there are three calculations and one thing you need to know very importantly. One is what we call the burn. And I'll explain it in a couple of minutes. The second thing is what we call the runway. The third is your growth rate. And the fourth thing you need to know is whether you are default alive or not. So these are four things you need to know. Now remember, three numbers, cash coming in, cash going out, and your bank balance. And four calculations, your burn, your runway, your growth rate, and to know if you're default alive or not. So let's start with the burn. The burn is something that is calculated in whatever currency unit you operate with. For the purpose of this discussion, I'm using Naira, obviously because I'm based here in Nigeria. Now, your burn is simply your cash out minus your cash in. So you take the cash that goes out of your business and then you deduct the cash that comes into your business. Obviously, to do this, you have to have a period in mind. So you look at, say, for example, you look at a particular month And then you take the information on how much cash has gone out of your business and how much cash has come into your business. So the cash that goes out will generally be seen as your expenses. And so for this example, I'm assuming that your cash out is 500,000 naira. And the cash that comes in this example, generally as your revenue, I'm taking to be 300,000 naira. It therefore means your burn is 500,000 naira minus 200,000 naira, which is simply 300,000 naira. So if anybody asks you, what's your burn? Your burn is 300,000 naira. And what this figure simply tells you is how much cash you are burning within a specific time period. Of course, when you're trying to do this analysis, you may find that over time, you have periods when certain cash figures are very high and in other times when it's very low. So in calculating this, sometimes you may want to take an average over a period of time. Now, just looking at this number, the question you want to ask yourself is, how do I reduce my burn? And if you just look at the simple mathematical calculation that you have there, I think it's quite simple. If you reduce the amount of cash out, you can reduce your burn. If you increase the figure of cash in, you can reduce your burn. If you do a combination of reducing your cash out and increasing your cash in, you actually also reduce your burn. So the burn is one important number that you should know. The second number that you need to know is what we call your runway. Now, before you know your burn, when you know your burn, the next thing you need to do is to figure out what your runway. Now, what's your runway? Your runway simply is how much time do you have before you run out of cash. So you know how much cash you are burning on a regular basis, on a monthly basis. The next thing you want to know is how much time do you have before you run out of cash. So your runway is calculated using simply the bank balance that you have. So you go to your bank statement at the end of a particular month or at the end of a period, and you divide the figure you have by your average burn. So you take what your average burn is over a certain period, right? And you apply it to your bank balance to determine what your runway is. So if you look at our example, in the same month of April, if my bank balance was 3 million naira and my average burn from the last calculation we did is about 300,000 naira, then it therefore means that I have 10 months of runway, right? Which means I only have 10 months left before I run out of cash, right? Remember, the runway is how much time you have before you run out of cash. So if you look at your bank balance and divide it by your burn, it tells you how much time you have before you run out of cash. The third number you need to know how to calculate is your growth rate. Now, your growth rate is very important because it is a rate that tells you by how much your revenue is increasing. And to calculate this, you simply take your cash in for a month, the current month, and take your cash in, deduct your cash in from the previous month, and divide that by your cash in for the previous month. Obviously, that will give you a rate. Now, if we use an example, in April 2020, my revenue or my cash in is 200,000 naira, and in May, my cash in is 250,000 naira. So my growth rate is simply 250,000 naira minus 200,000 naira divided by 200,000 naira, which gives me 25%. So what this means is that my revenues are growing at a rate of 25%. Now, for those of you who are, maybe you like playing with numbers a lot, you know what you want to achieve, and I'm sure many of you must have heard of the hockey stick or the J curve, where, in any business, when you start off initially, you have a decline in growth, and then you begin to grow until you cross profitability. Now, The simple thing is you want to make sure you are achieving a constant growth rate, because in this example, if you're achieving a constant growth rate of 25% every month, it means on overall, your effective growth rate is more than 25%. So the growth rate is another important figure that you need to calculate with those numbers I presented. And the fourth calculation is simply a yes or no. It's a decision kind of information that you need to arrive at. And it's what we're saying, are you default alive or not? So to do this, you need to know if your expenses are constant and if your revenue growth rate, or the growth rate you just calculated, grows at a constant rate. What you want to find out is if you have enough cash to reach profitability, right? So it gives you a sense of the amount of cash you need for your business to remain alive in a scenario where your expenses are constant or your cash out is constant and your revenue is growing at a certain rate. And now there's an interesting tool which I will encourage you to go and look at. I think it was developed by Trevor Blackwell from Y Combinator. And if you go to this website that I have, the link I have up there, you will find this tool where all you simply need to do is to move the graph to where your expense is currently, adjust your growth rate, and immediately it tells you how much cash you need for you to stay alive and when you actually will break even. So I think it's a very important tool that you need. Now, we've done all these calculations. So remember, 3 numbers: cash in, cash out, and your bank balance. And 4 calculations: your burn, your runway, your growth rate, and you need to know whether you're default alive or not. Now, the question is, what do you do with all of this in order for you to survive through the period of a crisis? Well, it's simple, actually. 1 is you increase your cash in, and 2 is you reduce your cash out. Or you do a combination of increasing your cash in and reducing your cash out. So I'm going to talk a bit about some things you need to consider and need to know on how you can increase your cash in and reduce your cash out. So let me start with your cash in. So there are 3 important blocks that you need to know when it comes to your cash as a business. 1 is your sales. And when I talk about sales, I'm referring to your cash sales. 2 is your debtors collection. So that is money that you are being owed outside. And 3 is capital that you may need for your business, right? These are 3 important building blocks that you need to consider when you're looking at that number of cash in. Now, in order to improve or to survive or to manage your finances during a period of a crisis, you need to look at a couple of things. 1 is you should consider adjusting your business plan to improve your margins. And to do that, you need to inspect your business plan. You need to look at your processes, your operations, and your expenses, and see what adjustments you can do to your business so that you can improve your margins. What adjustments can I make to the processes I run, to my operations, to all my activities, to even how I spend, so that I can widen the margin that I'm earning? This is a careful point that you need to do during a period of a crisis, and it impacts on your sales figure. The other thing you need to consider is whether you need to borrow or raise additional capital. If you do the calculation which I explained previously on the default alive, it will give you a sense of how much money you need for you to survive, for you to stay alive. Once you do that, you need to make a determination of whether you should borrow or you should raise capital. And I'm not going to spend time on this webinar talking about how to decide between these two, because we don't have time for that. But it's an important decision you need to make, particularly in periods when you are in crisis. Another thing to consider to boost your capital, to bring cash in, is to look at the assets that you have and to determine what you really need for your business. And anything that you have that is non-essential, you probably want to look at selling those assets so you can get cash into your business. All these measures help you to increase the cash that is going into the pot. The last thing you also need to look at, and this is not the last thing, you can think of other things, but the last important thing I wanted to talk about is you need to accelerate the collection of your receivables. You need to accelerate the collection of the monies that you have outside. And a couple of points I want to mention around that. So one is you can ask new customers that you procure to give you a deposit or a partial payment upfront. You know, sometimes we normally do our billings when you are, you do your billings at a particular point in time, and some entrepreneurs often wait to send a single invoice, once you do your job. Well, you may need to consider and look at ways by which you can get some kind of partial payment, upfront payment, so you can get cash into your business to oil the engine of your operations and reduce the pressure that you have on your existing cash in executing any product or service you are delivering to the customer. Another thing you can look at doing is you should start sending out your invoices early. Many people have procedures that you send your invoice at a particular, day of the month. You want to look at during period of crisis at making sure you get your invoices out early. The earlier your invoices go out, the earlier it is you can get those cash in. So you want to make sure that you are following up with your clients immediately and you deliver a product and service and ensuring that you are sending those invoices out early enough. The first thing you want to do is send out your invoices more frequently. So don't wait, until some people do send out their invoices every 2 weeks. You may want to send out your invoices even in a more accelerated way during a period when you are going through crisis. Another thing that is extremely important is you have to focus on your past due accounts. Many entrepreneurs make this mistake. You leave your money out there. You're trying to be nice, or you're trying to win a customer, and as a result, you give them a debt line, and you don't follow up to ensure that you get your money in. This is not something you want to do during a period of crisis. And as a matter of fact, during any time you are, whether you're in a period of crisis or not, you need to focus on ensuring that you can get your money. Start making those phone calls. Start talking to your customers. Don't try and be a bully about it, but try and explain to them and ensure you can get money in. Even if they don't give you the full money, whatever percentage of the money you are being owed, try as much as possible to get those money. Focus on past due account. And then the last thing I want to talk about is to make it convenient for your clients to pay. The other day I went into the supermarket to try and get some things, and I wasn't holding my ATM card. And I explained to the manager that I don't have my ATM card, but I can do a bank transfer. And the supermarket manager said, sorry, I can't take a bank transfer. You have to get your ATM card. And under my breath, I just laughed. During a period of crisis, you don't want to be like that supermarket manager. Any avenue or any opportunity that allows you to be able to collect cash in, you should make it open. Be flexible. Don't, think that, don't act on the basis of, well, unless the person gives me an ATM card and he swipes it through the POS, that's the only time I'm going to take payment. If you can take a bank transfer, take a bank transfer. Any avenue that makes it easy for people to pay to you, you need to look at those opportunities so you can get cash into the pot. So those are important things you need to look at when we talk about cash in. So let's talk about cash out. Again, there are 3 core pillars when you're talking about cash out. 1 is your cost of sales, right? 2 is your fixed cost, and 3 is your variable cost. And there are just 2 things I want to talk about as it relates to your cash out. And remember, our focus here is you want to reduce your cash out as much as is possible. So 1 is negotiate your payables. Now, many people don't do this, but it's extremely important that you consider it. The monies that whenever you are going to pay for something, either from your suppliers or whatever, you need to try and negotiate how you make those payments. Don't be in a hurry to pay, because what happens is, if you can retain some of that cash, when you get a job or you need to deliver a product or service that will generate you additional income, by holding on to some of the cash you are paying to your suppliers, you are able to use that funds to execute that job, generate the income, and then pay. And it helps you oil the engine of your cash flow. So as much as possible, negotiate your payables. Don't be too much in a hurry to let money go out of your system. Now, in doing this, of course, you have to be honest with your vendors, particularly in periods of crisis. They need to understand the importance, what you are experiencing as a business, and also so that they can empathize with you. Usually, if you are a loyal customer to them, they will listen and they will be willing to work with you whenever you are faced with a tight situation. But as much as possible, don't be too much of a hurry to let cash out. However, don't do it to the extent such that you give yourself a bad name in the market and nobody wants to deal with you because you don't pay. But you have to, it's an art. You have to carefully look at this and see how you can manage it. And some of it may even be you delaying as much as you can certain payments that you need to make. You know, don't be too much in a hurry, for example, to pay certain bills that you know they have a due date, and you just want to pay it ahead of the due date because you're just one of those people that don't like owing. There's nothing wrong with you holding on to the money so you have sufficient cash in, even if that money is earning you interest in your bank account, and then making those payments as they fall due, right? So always negotiate your payables. The second thing is manage your expenses. And there's a whole lot of things here around managing your expenses, but I'm just going to talk about 4 important things you need to know. One is you need to consider cost savings. Now, cost savings is simply reducing a specific amount of cost that you have already decided to incur. And usually, for a cost savings to work, there must be a direct activity that you are targeting to reduce. You don't reduce cost savings in the air. There must be something specific that is quantifiable, that has a monetary benefit that you are looking at to reduce. The second thing is you look at cost containment. Cost containment is different from cost reduction. In cost containment, what you are looking at, you have decided to do a particular product or to provide a particular service. And in providing that service, you have calculated what it will cost you to deliver that service or to produce that product. In a cost containment measure, you work to ensure that you remain within the limits of the specified budget for delivering that product, right? In cost savings, you reduce the cost in delivering that product, but in cost containment, you ensure that you don't go out of the boundaries that you've set for yourself to deliver the product. And one other way of looking at this cost containment, other than looking at it from an absolute value point of view, is to look at it relative to your revenue. So if you set to yourself, for every 1 naira I make, I'm going to spend 30 kobo. You ensure that whenever you're not making 1 naira, you're spending just 30% of whatever it is that you are making. That way, you are containing your cost. The third thing to look at when it comes to managing your expenses is cost avoidance. And in a cost avoidance scenario, basically what happens here is where you have a benefit as a result of certain ideas or initiatives that you put in place that reduces the need of you actually spending money that you would have spent otherwise. So you may not see an actual quantifiable figure like you see when you do a cost reduction, but in this case, you are avoiding a cost that you would have incurred as a result of the idea that you've come up with. So you need to think about these things and look at your business and say, what can I do that will create a scenario where I don't even need to incur a particular cost in the first place? And then the last thing I want to mention as it relates to cash out is what we call value enhancement. And value enhancement is the least cost for an essential function or service at the desired time and place and with the required quality and reliability. Now, that's a mouthful, but I can summarize that in this equation. Basically, all I'm saying is that for whatever it is you are going to spend on that involves a cost, in order for you to get value, you have to ensure that you are getting the right quality for the cost that you are paying. If you look at the mathematical information formula in front of you there, the way you increase value is when you reduce the cost you are paying for a particular quality. If you reduce the quality and the cost remain constant, you destroy value. If you increase the cost and the quality remains constant, you also destroy value. So what you want to do is to optimize this relationship between quality of what you are trying to procure and your cost. So those are my thoughts and my ideas regarding how you can manage your expenses during a crisis period. So I will now pause and take any questions that we may have. So we have a couple of questions that are already coming in. So I'll just read them and then answer them. So one question is, how does one apply the same business principles in the event of a currency devaluation? And that's a very interesting question and one that is actually very relevant to where we are currently. Now, the problem with a devaluation is if your business is a business that is dependent on importing resources, raw materials from outside, you have a bit of a challenge, because in a scenario where you have a devaluation, what happens is the cost of your inputs go up. Now, what you can do in that scenario is to ensure that you can, as much as is possible, you pass on the effect of the increase of that cost in your pricing structure. When I mentioned your cash in and I talked about, adjusting your business plan, this is one of the things you need to consider. You should always look at your pricing structure, and you're not doing your business any favor if you don't adjust your pricing to reflect the fact that the cost of your inputs has gone up. Now, doing this is actually not a science, it's actually an art. Because if you push up your pricing structure without getting the sensitivity of your market, you may reduce the volume of products that are bought. But if you are very smart about it and you do it in such a way that you manage your input, you can actually ameliorate the effects of a devaluation. And sometimes it may be that you also look at a different source of inputs, right? To reduce your dependence on an import-dependent input, or you look at other inputs that you have into the process and see how you can bring down those costs, or look at other operational costs that you have to bring that down so that you can work in such a way that you can have the pricing effectively done. Another question is, can burn be attributed to a deficit? That's exactly what it is. Your burn is your deficit. That's the cash that you have as a deficit as a result of the fact that you're not generating a lot of cash in. The third question is, to your point on Runway, it says, what if there is no revenue after the initial 2 months? And what happens to the Runway if your expenses is still at 500,000 naira, for example? Well, if you don't have, so the Runway, if you recall, the formula for the Runway is your bank balance divided by your burn. Now, in a scenario where you don't have any revenue coming in, you need to focus on that bank balance bit. And there are two things. One was the revenue is what pushes up, is one of the things that pushes up your bank balance. But the other thing that pushes up your bank balance, of course, is capital. So this is where the decision the consideration you need to have about raising capital comes in. But if you are in a business where you are not generating revenue over a sustained period of time, then you need to begin to look at, if you believe that it's a temporary glitch because you're going through an uncertain period or a crisis, then you seriously need to look at some of the other measures which I mentioned, which is like raising capital and selling non-essential assets. The whole idea is increase what is coming into your bank pot so you can improve that. There's a question here that says, what percentage of cash in would you suggest should go, I'm assuming the person says, should go into an account to cater for uncertain times, such as this pandemic in the future? I am one of the entrepreneurs that was caught completely off guard. You know that link I asked you to look at when I was talking about Default Alive? That's exactly what you need. Go to that website, right? Right there, you will see where you can impute, or you can, it's a graph that you drag. You can drag and show what your burn is, how much cash is going out on a monthly basis. And you can also adjust how much revenue you're making and adjust the growth rate of your revenue. And immediately it will tell you how many months, it will show you your runway, how many months you have to stay alive, and then also show you the amount of capital you need to go out and raise for you to be able to remain in business. So I will encourage you to try and look at that, to go to that link, and maybe I'll try and put it up so that you can see it, just in case you missed it the other time. So I have it up there. Then there's a question that says, to increase cash in, is it advisable to register and start up a new business during COVID-19 as a way to get money? Well, I mean, as an entrepreneur, I mean, if you see an opportunity and you believe you have the resources and the capabilities to monetize that opportunity, I would say go for it. So definitely, most definitely, I would say you should go for it. So I have a question that says, hello, Sammy. Please feel free to go over. Oh, sorry, that's my question. Sorry. I have another question that says, how can I make it easier for my clients to make payments? You know, as an entrepreneur, one of the things I always encourage is you have to know your customers. You have to know your clients. And you know, your relationship with your clients will help you address this question effectively, right? If you have a good understanding of your clients' needs and their situation, you'll be able to determine how best to make it easier for them to make payments to you. But one thing I always encourage entrepreneurs to do is you have to be honest. You know, be upfront with them. Let them know when you are in a tight situation. And if you have a good relationship with some of those clients, they will ensure they do whatever it is they can do to make sure that you remain alive. So that's what I would say there. There's a question that says, what is the difference between revenue, income, and capital, and what is, if any, the relationship between these three? That's a beautiful question. And I was careful in putting these slides together to try and make it simple, so you just look at everything from a cashing point of view. But let me say this. Number one, your revenue is the cash that you get in as a result of the sales of your products and services that you provide as a business. You can also call that your income, but technically your income may mean different things, depending if you're talking about your gross income, your net income, you know, or otherwise. But generally, it's what you earn as a result of the business that you're doing. The capital, on the other hand, is the cash, apart from the revenue and income that you're generating, that you need for your business to grow or to remain sustainable within the short to medium term. Yeah. So this is the kind of money that you may not be tied to the product and services that you are offering, but that you raise from investors to expand your business or to keep your business alive during a period of crisis. So I hope that clarifies that point. I have another question which says, how can a customer that has a habit of paying late be handled? Okay, so I mean, I don't think I mentioned it, but it was one of the things I had actually made a note for. When you are looking at, your cash sales, and improving your business, or adjusting your business plan, one of the things you actually need to look at is, customers that are costing you more than that are costing you more than they are actually helping you. You need to actually think of avoiding those customers. Because if you have a customer who is perpetually not paying you for your service, you are simply just funding that customer, and in any event, it's not good business. However, what I would say is the same way as you were on the when you are discussing with your payables, you should kind of like be open and try and understand what the customer's situation is, but remain biased towards your own objective was ensuring that you get cash in. But generally, avoid a customer that has a habit of not paying at all, or a habit of just paying late. Yeah. The next question is, normally alternatives to non-cash modes of payment attract additional charges. Should these always be borne by the customer? Well, I think it's a question of you need to look at your business model. So I would certainly not advise that in a scenario where you are trying to get your customer to put money in his pocket and pay for your service, that you ask him to pay for those additional charges. Especially if you are in an industry or a sector where that is not the norm. Because what the customer can do is just simply go to your competitor and get that done. The way you should see it is, you have your standard ways of collecting money, ensuring that you get cash in, that is more efficient. But in the period of the crisis, don't close the door on an opportunity to get cash in, even if it's going to cost you a little more. The next question is, how can I make a proper analysis of how much it costs for me to offer a service? And how can I convince clients to pay for the real cost, especially when they frequently complain that I am too expensive? This is a loaded question. And the first part of the question where you're asking how you do a proper analysis, I think will help you answer the second part. What I get from this is you probably need to look at your costing. If people are complaining that your services are too expensive, it could be one of two things. One is they could be bargaining, because again, remember, they are doing the same thing that I just taught you to do, which is they want to get value. So they are looking at what you are providing them and trying to reduce the cost as much as possible so they get more out of it. It could be that. The second thing is they could genuinely think that you are actually more expensive, whereby for the same quality that they could get somewhere else, you are more expensive. If that is the case, then you need to actually look at your cost structure and check, all your cost inputs and see where you are missing it. And sometimes doing some competitor analysis may help you get there. But I mean, at this session, we can't talk about, there's a session, we can have session. I'm sure there are materials you can find all over the place on how you can properly cost your product or your service. There are many tools that can help you do that. And then I have a question that says, is it wise for entrepreneurs to lean on banks during this pandemic as a safe store of our money and finances? So that's a good question. So even outside of a pandemic, wherever you put your hard-earned money, you need to be sure if it is a safe source. So it's a decision you need to make based on how convinced you are with respect to the reliability and stability of the bank. If you are in Nigeria or any of our African countries where you have UBA, I would recommend UBA. But generally speaking, it's a question of you being comfortable based on your understanding of where you are putting that money. And this is not just banks alone, but any other place where you are keeping your hard-earned cash. Okay, I have another question that says, if the worst comes to worst, okay, that's a typical Nigerian thing. If the worst comes to worst and your runway is depleted, what do you think can be the next step? So again, I'll refer you back to the tool. that I mentioned, what that helps you to do is that you should calculate your runway and you see, oh, I only have 3 months left based on what I have in the bank and how much I'm burning on a monthly basis. I only have 3 months left of cash. Then you need to begin to think of how to raise capital or how to, well, think of ways of how to increase your cash in. So you can go to some of the points I had mentioned earlier on how to improve your cash in and see what you can do to do that. So you can look at capital options, improving your sales, and also ensuring that you can manage your receivables or your debtor collections. Okay, so I have another question that says, how do I increase my cash in this period of crisis? That's what I just went through, by the way. And where it says, how do I increase my cash in this period of crisis where we, the business, incurs more cost in offering services and customers are not ready or willing to pay more for the services? I think I understand the concern here. And you know what I would mention is, in period of crisis, you will find a situation where your cash in is reduced. You need to immediately begin to look at your cash out and begin to look at what do I do to reduce how cash is going out, basically to reduce my burn until such a time I think that my cash in can improve. Yeah, so that's something immediate that you need to do. So you need to look at some of those measures we discussed: negotiating your payables, managing your expenses. Where do I reduce cost? How can I contain cost? How do I avoid cost? If I actually have to spend anything, how do I ensure that I'm getting the best value out of it? So you have to look at cost as an immediate cost management as an immediate step you need to take, and ensure that you can keep your costs within the levels of the cash that you are generating. The second thing you should look at, which I've also mentioned during the course of this conversation, is you look at options of raising capital. To raise more money if you honestly truly believe that your business has prospects in the near future. Another thing you can also look at areas of diversifying your business. It's one thing I didn't mention here, which is important. As a business, you need to look at your capabilities and the resources that you have and see what else can I do that may be relevant in this time that can generate more income. That's why I talked about adjusting your business plan. You need to look at your business as a whole and see, what else can I do? If I already have these, assets or these resources, how can I use it to generate more income until such a time as my regular form of income can resume the way it was, right? And there's a question that says, looking at business of today, we discover that the quality of products are inferior while the prices are exorbitant. How do we correlate this with the value enhancement? Well, that's the discussion, right? If the quality level, you have to ensure that you are paying the right amount for the quality that you're getting, right? You don't pay, you don't let your cash, especially during the period of a crisis. If you're going to buy anything at all that you need, you have to carefully look at what you're buying and ensure that the quality standards are commensurate with the cash that you're paying for it. If you buy something that is of low quality, make sure you are paying low quality cost, right? But if you're buying something that is of a certain level of quality, the key thing is to ensure that you are paying the right cost for it. And how do you do that? You actually have to do a couple of, research and check it out and see what other people are offering, get quotes from a number of people, compare what each person is saying, and see how you can get the best deal for whatever it is that you are paying for. So I think I will stop right there. Thank you very much. I hope you found this very helpful. And Kelly, if there are any other questions related to what we've just gone through, please feel free to drop a mail to enquiries@tonyelumelu-foundation.org. That's enquiries@tonyelumelu-foundation.org. So I wish everybody have a blessed time and continue to stay safe. Bye.